Hey guys, how's it going? Welcome to day 3 of the Market Mastery series. Today I'm going to be focusing on my entry. So I'm just going to keep this short and sweet, okay? Because I just made another video like 5 minutes ago. And it was the exact same thing. But as I was trying to post it, I went into the saved videos and it just didn't pop up. So I don't know if my computer didn't save it or what was wrong, but it was just a little bit weird and pretty annoying. But I'm going to get all the stuff out of the way, and I'm going to make this video a little bit more valuable because now I basically know exactly what I'm going to say, and I'm not just going to be winging this because I have a basis of what to do. So there's two main ways that my strategy works. The first way is what we were talking about last week, okay? You have your sellers here and your buyers here. What happens if buyers break above the point where there's sellers and they stop the sellers out? I mean, obviously, it continues to go up, okay? Or we have the second way, which is just a different way of taking out way number one, which is this. Okay, let's say that price is consolidating. Consolidating just means that price is moving up and down over a long period of time. And you should not be taking trades whenever price is consolidating because you have no clear direction of price or where it's going to go. So let's say it's consolidating and then it breaks out to here, okay? That means that down here we know our sellers are very powerful. We have lots of sellers because they created this huge price movement. They created this this long leg right up here that pushed price all the way up there. Okay? It pushed price all the way up there. Then price comes back down and it corrects. So it comes back down to this area where there's lots of buyers, okay? That means that there's lots of sellers up here. And the sellers are just as strong as the buyers were down here because they push price equally they push price equally for the length. Once you get back down to this zone, you know that there's lots of buyers down here. So you wait, you go down to the 15-minute time frame, and you wait for a break of structure, okay? So it's going to look something like that. This one's a little bit more complicated than the first entry, which is just this. But it provides for a lot higher RR. And this entry right here is basically just this leg right there. You see? I don't know if you guys can tell. This is just the bigger version of this, or the bigger movement, you could say. So this is not as good of a setup as this is because you have the confirmation that you have lots of buyers down at this point right here. But it's still definitely a really good confluence. So buyers here, okay? Sellers here are no longer valid because they've all gotten stopped out from this big move up. But what do we know? We have major sellers up here and we have major buyers at this point right here, okay? Because what happened? Buyers broke above this level and they continued up until they lost momentum and sellers took over. And then what happened? Sellers pushed it down and they reversed the price, obviously. They corrected it. So this is what I like to call this. So this is accumulation right here. Okay, accumulation. Then we have the right here. You can call this the indication or whatever because it's indicating the direction that price wants to move. And then you have so after the indication, which is the long leg up or down, it doesn't really matter what direction. You have the correction, which is when it's been overbought, so it comes back down into the previous point where it was accumulating. And then right after that, you have so this is the accumulation, indication, correction, and then this is the continuation. Continuation just means that price is respecting these buyers right here. Change the color of this. So price is respecting all these buyers down here, and it decided it's going to go back up. Let's delete this stuff and show you guys an example on the chart. Okay, so we're going to find the example on the charts. So this is what I marked out previously, and what do we see? Okay, this is an actual perfect example. So we're on the 1 hour time period, and we can see that there's a little bit of accumulation right here. Keep this blue. There we go. Okay, so there's some accumulation right here, okay? That just means price is moving back and forth, and there's not a specific place where we can see that it wants to go. Then what happens after the accumulation? The indication. So after we see this, we know that price wants to go down from this point, okay? Because we have the accumulation, then the indication. And then what do we have next? We have the correction, which takes us back up to the point of accumulation, okay? So we come back here, and these orders get filled for shorts. Now what do we do once we hit this point? We're in the 1 hour time frame. We drop down into the 15-minute or the 5-minute, it doesn't matter, either one of those works. And we wait for a break of structure to the downside, because what's going to happen after this area gets, what's going to happen after it corrects? Most likely it's going to come down again. So we wait for a break of structure, and then we enter with a tight stop loss. But we keep it a little bit above the highs just in case it comes and does some liquidity sweeps like what it did here. And the liquidity sweep is basically just a fancy way of saying that people knew there was going to be short orders here. So what they did is they bought more to take these people out, because then what would happen if these people had orders right here in this area because they thought it was going to go back down is it takes them out. And then what happens when those positions automatically sell? Because their stop loss gets hit, so those positions sell, and it causes price to go down. But all you need to know is that liquidity sweeps are often followed by a movement to the opposite direction. So since price came up here and took out this high, most of the time it's going to come down, okay? And then what do we do after this? We go back into the 1 hour, and we look for a low to target. So we target this right here, or you can target this right here, which this would be a little bit more like of a realistic target for me. And then you could just trail your stop loss after you get to a certain point. So that's a really good 1 to almost 3 risk to reward. Yeah, that's a 1 to 3 risk to reward basically. 1 to 3, we'll just say that for the sake of it, because that's something that you could realistically get. But then what you'll do is you wait here in the 15-minute, and you see, okay, what's price doing? So price comes down, makes a high. What's going to happen? It makes a lower low, so we can see it's continuing to go down. But then it makes this high right here, because this one's lower and this one's lower, so there's a high right here. And then right when it breaks this high, you would close the position because price is going back up. So you have a 1 to 3 basically risk to reward ratio for that one single trade right there. And that's basically it. So we had just to label these for you guys, accumulation, I'm just going to label all of these so you guys can get this really in your head. Indication, correction, and then this last part right here would be your continuation. So it's AICC. AICC. Look. That's how it works. I'm not going to do all that, but look. This is all you have to understand. These are the steps of my strategy. Accumulation, okay? Indication. Correction. And then continuation. That's all it is. Just these 4 steps. And these are basically just things to check off a box, okay? So, as I was saying, on gold, I'm trying to look for shorts now because you can see we're trending down. And that's the other way that we can order, like what I was saying earlier. You can also order off of something as simple as this. It's just not as high probability. But it doesn't really matter because you just target lows. But it doesn't really matter, okay? All we need to know is where the buyers and sellers are, and this stuff is really easy, I'm not gonna lie. Like, if you can just take a second to break all of this stuff down right here and like pay attention to the stuff that I've told you and just maybe go back and rewatch this a couple of times, you'll understand that this stuff is like ridiculously easy. And you can basically teach like your little brother how to do this, or your grandma how to do this, basically. I don't know what to say, guys. It's pretty easy stuff. I don't know. I hope you guys really enjoyed this one. I know it was kind of hard for me because I had to do this twice, or almost 3 times, because I just had more problems with my phone and the storage. But this is like A-tier sauce right here. So you guys need to take this stuff seriously, because this is like my strategy. Like, this is what I use, and I'm giving it to you guys for free. So I don't know, be like a little bit appreciative of that and take that into account whenever you're learning. Also, I just want to say, after you break structure a couple of times, this is just a little note to take. You can just put your stop at break even, so you don't risk anything. Especially if you're trading funded accounts, you might want to do that. But it kind of just depends on what you feel like risking, because sometimes price will come back up and then go back down. So I don't know. It's whatever you guys want. But this trade right here would have made me like 4%, because most of the time I trade with 2x leverage. So this trade right here would have made me 4%, and that could have basically passed a funded account in a matter of like a little bit over 10 hours. So that's pretty good, okay? And that's like an A+ setup. So I hope you guys enjoyed the video, and I'll see you in episode 4.